Good morning, everyone. Welcome and thank you for joining our webinar today. And this is Jyoti here from MyTimeEquity. And in today's webinar, along with Sudhir Pai, we have with us Anup Nayak and Bhavya Joshi. Before we start the webinar, I would like to take this opportunity to introduce you to MyTimeEquity and Sudhir. As an actively managed portfolio management and RIA firm, MyTimeEquity takes pride in being your dedicated partner on this financial adventure. Sudhir Pai is a founding principal and serves as a fiduciary investment advisor representative for the firm. Before I hand over to Sudhir, let me take you through the disclosure slide that our attorneys mandate that we show prior to every webinar. In this slide, we have also added the QR code for joining our WhatsApp group, and you can scan and join to the WhatsApp community to get the latest update on equity market, alternative investments, RE, crypto, and other investments. If you have any questions during the presentation, please feel free to type them on the Q&A box and we will have them during the end of the session. If you need Sudhir's help, please write to wealth@mytimeequity.com or call us at 972-330-2771. Over to you, Sudhir.
Thank you very much, Jyoti, and very welcome, ladies and gentlemen. Thank you for joining today's webinar. Today we are going to talk about the market, and we'll also be talking about our digital asset fund, which we started in the month of May, and we are 2.5 months old. We will give you a glimpse of how we did in May, June, and so far in July. So before we get into that, let's talk very quickly about the markets. So the market did extremely well. The S&P was up by about 1.5% and NASDAQ about 1%. Bitcoin consolidated, it was down by about 1%, and gold also took a breather, was down by about 0.06%. So overall, good times. Market is at all-time highs, and we are very bullish about this market, primarily because the earning season is doing very well. So 84% of the 33% of S&P 500 companies, so about 150 companies, announced their earnings, and 84% of them beat estimates by a median of 4%, which is an excellent number. And technology, especially Google, came out with very good results, and they also said that $85 billion of budget is kept aside for capex towards semiconductors and data centers and things like that. So companies spending more money on capex is a good thing, which means AI companies continue to invest and continue to build their infrastructure, which means bright future ahead of all of us. So I see this as 1990s when the internet got built, and today we are seeing Nvidia and SMCI and Taiwan Semiconductor more like what we saw during the Cisco days and Juniper days. So the platform infrastructure is all getting built, which is a good thing, and with all of the companies coming out with good earnings is certainly a good news for the future, and we are very hopeful of 2025. Seasonally, the month of July, first week is very good, second week is kind of flattish, and August is again kind of in a consolidated mode, because most of the time you get to see, after the results are announced, you get to see profit taking, and those who are sitting on the sidelines putting the money back. So it's kind of in a sideward movements in the month of August. September is the month where corporate returns are filed. October is the month where individual tax returns are filed. So more money comes out of refund and more money goes into equity markets, pumping the markets higher. So starting October, we should see this market do well, unless we see not so good earnings for Q3 or any negative news on the FOMC side, where interest rate doesn't get cut even in the September FOMC meeting. Currently, there is 85% probability of a cut in the September FOMC meeting, and further cuts for the rest of 25, and more cuts in the year 2026. We get to see a lot of press these days where President Donald Trump is putting enough pressure on Chair Jerome Powell, but he is not heeding to any kind of pressure so far till he sees his 2% inflation number and 4% employment number, which is not the case right now, and which is where he is deciding not to do any kind of interest rate cut for the month of July. On the tariff front, 15% tariff agreed upon with Japan. Similar negotiations is going on with the European Union as well as India and other countries. Nothing surprising there. Everything seems to be okay, and it is kind of clear right now that tariff may not increase the inflation numbers, because inflation gets accounted for only once, and after that there is no significant impact of tariff on inflation. But the Fed chair does not believe that, and he is very tight on lowering the interest rate further. So let's see how it goes. But as of now, S&P doing well, QQQ doing extremely well, and the next catalyst is next week, where Apple, Microsoft, Meta, and all other IT companies and technology companies are going to come out with their earnings for Q2, and we have the JOLTS job opening reports, as well as core CPA and non-farm payoffs. So as of now, as you can see in the chart, we are trending up. We are above all the moving averages, 200, 51, and 21-day moving average. So very bullish on this market. Momentum is good. So let's continue to be in the market without getting into any kind of panic mode. Next. So we launched our MyTimeEquity digital asset fund in the month of May, and my check was the first check to get deposited on 1st of May, and after that we started raising money in the fund. So we raised about $350,000 in the month of May, June 223, and July 175, total of about around 700K. And the raise, we are going very slow. We are not trying to raise a lot of money in the fund, because timing is everything for me. So when we launched the fund in May, the news of stablecoin and all that was not announced. So I put my first check, and the second half of May is where we started getting most of this other $250,000. And our minimum for the fund is 50K. In the beginning, we even took $25,000 checks. So the raise is about 718K so far, and we have about $1 million worth of interest now that everybody gets to see the Bitcoin and Ethereum and other altcoins kind of doing well. So there is some kind of FOMO going on in the market now. So we are seeing a lot of interest, even though we are not putting in a lot of messages about our crypto fund. There seems to be increase in the interest level. So we are hoping to see the numbers go up in our crypto fund. But from a results point of view, if you look at the first line under performance, which calls itself MDA, MyTimeEquity Digital Asset Fund, we performed 2.9% for the month of May, and June was negative 0.3%, and July, as of 21st July, the fund has performed about 12%. Now, why is the performance varying? As we all know, crypto markets are very volatile. It changes on a daily basis. The first half of May was excellent for Bitcoin. As you can see, Bitcoin performed about 11%. But the second half of May, which is when we raised about $250,000, the returns were about 1% for the second half of May. So which made us look like we did not perform well. But the fact is, $250,000 of the money just was performed only for 15 days. And the first check which I deposited from my family office performed for the entire month. So that's why you see around 2.9%. And for the month of June, BTC performed about 6.5. But as you can see, the CCI 30 index, which represents 30 different tokens, which includes the altcoins, 30 different altcoins. Altcoins actually took a beating in the month of June, about 6.7%. Now, if you can recollect the thesis of our fund, 70% of the money in the fund gets invested in other funds, and 30% of the money gets invested in Bitcoin, and 15% of that 30% gets invested in 5 altcoins. Now, the 5 altcoins that we invested in are Ethereum, Doge, and XRP and Solana and Shibu Inu. So those coins actually took a beating in the month of June, which is where our fund underperformed by about 2.2%. But if you look at July, Ethereum really sprung into action, and all the other altcoins are coming back to life. And we think the Bitcoin dominance. We recently sent an article. We posted the article even in our WhatsApp group. Bitcoin dominance, which means the growth of other altcoins versus Bitcoin, gets on the higher end, gets on the higher side, which means Bitcoin's performance is lower than the altcoins performance. So we see the Bitcoin dominance going down, which means the altcoin should start doing well, which means that our fund should do better, because we have a good performance, a good amount of money in Bitcoin and a small percentage in altcoins, because we believe in timing the market. The funds in which we invest believe in timing the market when it comes to crypto, because this is a crypto hedge fund. This is not a long only fund. This is a fund where we try to beat the market and try to get the highest return for the full year. So far, about 748K raised, another $1 million to come in, and we have done pretty well for for the short duration of the fund. And all our investors who have invested in the fund will be getting their statement for the month of May and June from our third party administrator, which is NAV. They will be sending a statement for the month of May and June. We got a little delayed in sending the monthly statements because the fund just got launched. The CPA, the third-party administrator, the bankers, the crypto exchanges, integration of all that, bringing everything together took time. But that should not happen going forward. So we should be able to see the statements come to you by the 10th or 12th of the next month. So this is the performance of the fund, and given that we are seeing the whole crypto doing well because of a lot of things which I'm going to explain in the subsequent slides. My suggestion is this is the time to get in the crypto markets, and I'll explain why. Next. Okay, so crypto has got a lot of press these days. If you look at Wall Street Journal or any mainstream media or any site, you will get to read a lot about crypto, and that is where the institutional adoption of crypto has been really high. I'll explain about retail versus institutional adoption in the subsequent slide. But if you look at what are the regulatory developments that has taken place, so we saw Genius Act getting approved, which is a framework for stable coins. Stable coins means issuance of tokens which are backed by liquid assets like US treasuries. So what happens with stable coins getting released, and what happens if this framework? So this is legalizing the stable coin thesis, the concept, which means if any person in the world wants to buy these stable coins, these are backed by US treasuries, which means the best credit instrument out there. US government is the top country government in the world which kind of backs the treasuries. So the entire world wants to hold US treasuries. Right now there is a concern of high deficit, and China and Japan trying to get out of US treasuries. That causes some concern to the treasury. But the beauty of this government, the current administration, is the launch of this Genius Act and the stable coins is adoptability of these tokens by every other person or institution all over the world. So let's say someone living in India wants to buy the stable coin which is on the blockchain network. It's so easy to buy. You just go online, sign up into a custodian, and then buy them. So when you buy a stable coin, this person in India is now holding a coin which is very, very easy to transact. Second, backed by US government, backed by US treasuries, which generates about 4 to 5% return. And it is in dollar terms, which means the depreciation element that happens to Indian currency will not touch this stable coin, right? So if you look at this, the entire world may end up owning a lot of stable coins because of the strength of the dollar and strength of blockchain technology. And just the sheer fact that it is transferable so easily to anyone in the world, and not to kind of make it small, that the privacy and transparency and all that comes along with blockchain is part of the whole stablecoin thesis. So that's the Genius Act. So that got approved in the US. And Clarity Act, which is basically giving more regulation to the crypto assets. And so right now US really wants to be in the front runner in crypto. From the last few years, the government was not really serious about legalizing crypto. Lot of support was coming from the Middle East and other countries in Asia, but not from the US. But as President Trump was running for his election campaign, he made a promise to the crypto world that he's going to bring this to the forefront, make blockchain number one in terms of technology. And we saw Bitcoin and all the crypto assets kind of doing very well the day of inauguration. And now we are seeing the results of why that was the case. Two laws got passed, and then there is also the Bitcoin strategic reserve, which most of the states are kind of setting up, where these companies will these states are going to acquire as much Bitcoin as possible, because Bitcoin is the most scarcest asset right now. And scarcest assets, the demand increases and supply is limited, and that's where Bitcoin will continue to increase the price, and giving a higher return to the investors who own it. And there is another law, which is anti-CBDC surveillance state act. This is an act which bans central banking from creating their own digital currencies. More announcements are to be seen. Companies like Robinhood and Kraken announced trading of tokens on their platforms, and asset managers are putting their clients in crypto assets. And asset managers are also trying to tokenize some of their qualified alternative funds into tokens, so it can be exchanged very easily. And the government is also trying to not levy any kind of tax on payments made using Bitcoin and things like that. And there is a law, and there are companies, employers opening up their 401k to crypto as well. There are close to 13 ETFs just for Bitcoin. Recently, ETFs were approved for XRP as well as Solana. There are approvals pending for Bitcoin and other altcoin ETFs. So a lot of approvals are coming out of SEC, since SEC now has an open hand to look at crypto with a broad mind, and approve things that are required for institutions and RIAs and wealth advisors to put their clients in crypto assets. But at MyTimeEquity, most of our models, the models which are on the custom side do have um, crypto in them, particularly Bitcoin and Ethereum. And the MyTimeEquity digital asset fund has access to multiple strategies, multiple tokens, and different managers, being part of the management of the fund. Next slide. Okay, so this slide basically tells how stable coins are making their mark. So if you look at the graph on the left-hand side, the stable coin versus regular transactions that are happening on Visa. You see the bar in 2024 kind of coming close to the transactions that are happening on Visa, and 2025 is where the law got passed, the stablecoin law. So with this, we should see a lot more transactions happening. In fact, the day Genius Act got passed, Visa and Mastercard's share price dropped by almost 13%. So, there is a big concern for those companies, in case they don't adopt blockchain and tokenization and, virtual coins and all that, so that needs to take place. Otherwise, these legacy systems are going to drop off. And companies like Ripple, which is, the trendsetter in stable coins, as well as, Robinhood and Kraken, and custodians like Coinbase, miners like Riot and Mara, and all of these companies are going to very soon show up in the S&P 500 companies. Right now we have Coinbase as part of it, as part of S&P 500, but we may see a lot more companies getting added to S&P 500, which means crypto is going to be really mainstream very soon. On the right side, you get to see the chart which shows who are the holders of US treasuries. The number one holder of US treasury is Japan, and China, India. You can see all the countries holding US treasuries. But then stable coins is the last sixth, in line. But I'll not be surprised, if this becomes number one in the next 12 to 24 to 36 months, because there is a benefit of holding a stable coin by a lot of people out there. Just education is required, and promotion is required, and people will start owning stable coins versus anything else in their brokerage accounts or custodian accounts. A lot of 401k plans we are seeing are holding Bitcoin and Ethereum and other altcoins. We don't suggest you hold any other type of coins, but we are seeing a lot of adoption of crypto since this administration has taken over. Next slide. Coming to Bitcoin ownership, Bitcoin, as I said, is the scarcest asset right now. 21 million coins, of which individuals own about 69%, or about 14.5 million coins. And the ETFs, the third one, has about 6.2%, or about 1.3 million tokens, Bitcoins. So you are seeing that these numbers are increasing, and we just have about 1.2 million, or 5.5% of the 21 million Bitcoins yet to be mined. And it will take the last Bitcoin for it to be mined. It will be 2140. That's when the last Bitcoin will be mined. And we are seeing a lot of companies holding Bitcoin as part of their corporate treasury. If you have followed Michael Saylor, who is the man behind MicroStrategy, now it's called Strategy. If you have seen what Elon Musk did in 2021, he started buying Bitcoins on Tesla's balance sheet. Similarly, there are a lot more companies these days that hold Bitcoin as part of their corporate treasury. Rather than putting money in money market, they are okay with the volatility, and they are just putting their treasury into Bitcoin, because Bitcoin is only going up. While the volatility is high, something that goes up has to come down, and in case of Bitcoin, it is even higher, because it is on 24/7 exchange, and it's open, and it is not regulated right now. So the volatility is very high, but we are seeing the volatility slowly come down as we see more institutional adoptability of Bitcoin. And governments are also trying to add a lot more in their strategic reserve. US government has coined the thesis of putting a lot more Bitcoins in their strategic reserve, along with XRP and Solana and Ethereum. So individuals still account for 70% of the ownership. As institutions start pulling them out, we should see more stability. But Bitcoin certainly is an asset that each one of us need to have in our portfolio. Next. Spot ETFs, the inflows are at all-time highs. As I mentioned earlier, we have close to about 12 or 13 just Bitcoin ETFs, starting with BlackRock to to Blackstone, to Vanek, to Cathie Woods, ARK, Vanguard. So there are so many Bitcoin ETFs these days, and institutional adoptability is going up, and Ethereum ETF is also there. And so all these ETFs are sucking in a lot of these coins, and people are investing through the ETF because it's very easy to buy Bitcoin and Ethereum ETFs through the stock exchange because there are ETFs. But the not so good thing about these ETFs is there is no staking income out of there is something called staking income when you own a real coin. You don't get to see the staking income by owning ETF. Similarly, you are not holding the complete coin, you are just holding a unit of the ETF. So in our fund, we have a Coinbase account, and we have investment in other funds. The funds actually do long, short, and hedging and all that. But through the Coinbase account, of MyTimeEquity Digital Asset Fund, we hold the coins for long, and we will only entry and exit in based on the technical indicators, and that's more long strategy. So it's a combination of multiple strategies, multiple managers, multiple tokens, and we'll see that in the next slides. Next slide. So Bitcoin trajectory, this slide shows you what we expect out of Bitcoin in the coming days and years. Global money to supply, which means the way the country prints, all the countries in the world prints, currency, that's increasing because countries are printing currencies like nothing. They just keep printing money all the time to meet the needs of that country. US is printing a lot of money, as we all know, and with the print of more currency by each of these countries, the price of Bitcoin follows that trajectory. So we are very hopeful of Bitcoin touching around $140,000 by end of the year, or maybe even higher. Some experts are predicting about $230,000 by end of this year, and $1 million by end of 2030 per Bitcoin. Now, seasonally, usually August and September months tend to be weak for the crypto markets, but we have to see how this year goes because there is a lot of regulation, there are a lot of institutional adaptability, as we saw. But overall, the trend for crypto assets is on the upside. We saw Bitcoin touching almost 122K, and 123, I think, was the highest price. And we expect it to be touching 140, if not more, by end of this year. So this is the time to get in, guys, in crypto assets. Next. Ethereum is the other coin. We call this silver of the crypto world. Bitcoin is the gold, and Ethereum is the silver of crypto world. Ethereum is the technology on which lot of applications are being built. The stable coins platform is Ethereum. So with the stable coin act getting passed by the government, we saw Ethereum kind of take off. We saw Ethereum saw a 42% increase in the month of July so far. Ethereum went down a lot, in the last 6 months, but then because there was a debate whether it's Ethereum or XRP or Solana, and when Donald Trump launched his Trump coin and Melania coin, on the inauguration date, that was on Solana. So there was a lack of clarity in the minds of the experts whether is it Solana the next technology, or Ethereum, or is it XRP, which is by Ripple. But all of these are now added to the charter of the US Strategic Reserve, which means each one of them may have its own utility, and we may see all three. But given the Stablecoin Act getting approved, we have seen a lot of traction in Ethereum, and the transaction volume on Ethereum layer 2 has increased by almost 10x. And I think this will only continue to grow because more applications are getting developed. more coins are getting mined, and more tokenization taking place, in the world, for real estate and things like that. We will see the adaptability of Ethereum going up, and the prices of these tokens increase. So Ethereum is part of our fund. As we call it, this is the silver of the crypto industry. So after Bitcoin, it is Ethereum. But Ethereum can be mined unlimited. There is no limit to it. Ethereum is not as fast as some of the other technologies like Solana and Cardano and others, but Ethereum certainly it has the first mover advantage in a layer, which is layer 2, for buildup of applications and things which are required for adoption in the technology world. Next slide. Okay, so coming to the basic question, why invest in crypto, or why invest in the MyTimeEquity digital asset fund? Our fund has a very broad exposure to not just Bitcoin, but various type of tokens. We personally manage altcoins to the tune of 15% of the fund. In the long strategy, as I said, the long strategy has Ethereum, XRP, Solana, Cardano, and Shibu. And our other managers that we invest in other funds, they participate in decentralized finance, layer 1, layer 2, hedging strategies and things like that. So we have a lot of coins, as part of our overall fund. And the participating minimum in our fund is $50,000. So what happens here is, by investing $50,000, you get access to not just Bitcoin, not just me and Bhavya Joshi managing 30% of the money, but also far more managers, different tokens, different strategies. So it's kind of all-in-one fund for a low minimum. And the fund is very liquid. You can exit out of the fund anytime, but we have a 12 months lock on the fund, so that people don't invest and ask for money the next day. So we have a 12 months lock. But the funds are all very liquid, because it's all tokens, liquid tokens. We are not investing in ventures or any companies. So very liquid tokens, multiple managers, multiple types of tokens, layer 1, layer 2, layer 3, DeFi, all of the different technologies out there, and timing, right? So we launched the fund in May. We all saw what happened since May. We saw how things are changing. Similarly, we launched our India Tech Fund in 2022 October. We closed the fund in 2023 December. So it's all about timing, right? So we invested in India in those 12 months. We raised about $32 million, and we invested in 12 different funds, including Nandan Nilekani's Fundamentum, Asim Premji's Creators, and different funds. And we see the timing to be very important, the funds to be doing well, as well as our fund to be doing very well, because of the diversification that we have across various funds and across various asset classes. Now, on the Bitcoin seasonality, why is it important to invest today? When it comes to Bitcoin seasonality, and seasonality does not mean it will recur, but most of the time it does, it rhymes. So August and September months are not such great months for Bitcoin, but it does give a lot of push to altcoins, the non-Bitcoin tokens, right? So these 2 months are not going to be very strong months, August and September. So this is the time to get in, right? When the markets are hot, you don't want to invest. When the markets are down, you need to put more money. So if you look at our fund, May, June, July is where we raised about 750K. We have about $1 million more coming in. That's because we have started talking to our clients, saying that, hey, look, this is the time to put more money. Things are all becoming more stable now with all these new changes that the current administration is doing. And let us try to get the highest return in the months of October, November, December, because the last 3 months are extremely good for Bitcoin. And you get to see this on the screen here, right? The chart shows that October, November, and December are extremely good for Bitcoin and other crypto assets. So guys, this is the time to invest in our fund. 50K is the minimum. And after that, if you want to do some kind of a systematic investment plan, we need is a simple one-page document once you are in. And this is only for qualified clients. And this is a very liquid fund. So this is the time to put your money in crypto, and we can have a one-on-one conversation to explain you what percentage of your net worth should go in crypto assets. We can get on a call, explain to you, discuss with you and your family about what's the right amount to be invested in crypto assets. So this is about our fund, folks. I think we have done very well, and we continue to do well with the limited amount of money that we raised. Wherever we are, we are good. But I think we need your support, and we need you to participate along with us for the rest of this year and the years ahead to make this even more successful. Next slide. A quick glimpse of different funds that we have evaluated and invested, and 35 plus token exposure, Bitcoin layer 1, layer 2, and DeFi, DePIN, and others. So you can see, there is huge diversification in our fund, which is what you need in a fund, and still generating a decent return out of such a volatile asset. Next slide, please. Okay, so that was about our digital asset fund. Now let me quickly show you the performance of our equity models. Our equity models did fantastic, for the week. S&P 500 was up 1.5%, and our models, if you look at AI Tech, was up by 1.2. If you look at All Weather, up by 1.51. All Weather is a model made up of a lot of individual stocks, about 20-25 positions, and it is beating the S&P 500. It's 11.64% for the year, while S&P 500 is 9.36%. So it's about 3.2% ahead of S&P. And if you look at the ETF models, our growth model, which is year to date 14.72, is much ahead of S&P 500. Even the value model is ahead of S&P 500. The next generation, which is the innovation ETF, is 29.86% up, but for the week it was down about 1%. And metals and crypto kind of sideways movement, because Ethereum did well, Bitcoin sideways, gold sideways, and silver did well. So overall, for the year, 28.43%. And international model rocked because Japan was hot last week, China was hot, India, Brazil, Indonesia, Greek, Europe, all were good because of all this contracts, tariff contracts with other countries by the US really pumped other countries. So it was up by about 1.28% for the week, and total of about 18.84% for the year. Our custom models, which is more of a wealth preservation model, we have 4 of them there. The custom margin model is where we take about 30 to 40% margin on your accounts by going a little bit more aggressive. That's a choice that you want to make. We have an aggressive model as well, but under the wealth preservation custom model. So overall, everything is good. So next slide, please. Next slide, Jyoti. Jyoti, next slide. Can you hear me?
Yeah, we can hear you.
Yeah, the slides are not moving.
1 second, please.
Okay. Now it's okay. So coming to the structured notes, folks, we have 2 new structured notes to show you. This one, what you see on the screen, is from Goldman Sachs. This is a Goldman Sachs note. It's an income note, and it is linked to 3 stocks, all 3 S&P 500 stocks: Palantir, Broadcom, and Nvidia. This note has 2 beautiful features. One is memory, which means if there is any missed month of income, it comes back up when all the 3 stocks are above their barriers. And this also has something called as a star feature, which means at the end of the term, if any one stock is positive, you get all your money back. So the risks are much lower. For such a safe note, with the two risks eliminated, which is with the memory and star feature. The annual income on this note is 16.2%, and it is paid on a quarterly basis at 4% per quarter. And this note has a 40% barrier on income and 40% barrier on principal. It's a 5-year note, but most of the income notes get called within the callable period, which is 1 year in this case. So this is, in short, this is an income note which generates 16.2% paid on a quarterly basis at 4.05%. And this note, the trade date is July 31st. So today is July 26th. We have about 5 days to go. Very good high income note backed by 3 solid companies, quite volatile companies because they are all in technology. Palantir is the most volatile, and higher volatility means better returns in structured notes. But since there is a downside protection of almost 40% or 40% in this note for both income and principal, that makes this a risk mitigated and a protected note to an extent, generating 16.2%, which otherwise, if you keep this money in treasury, you get 4.5%. If you keep it in CD, you get 5%. If you put it anywhere else, there may be illiquidity, like in some of the debt funds given to a real estate developer or any other individual or a company that you invest in. They may give you 10-12% return, but it makes it illiquid. Now, the beauty of these structured notes, it is very liquid. These are held in your brokerage accounts. We work with Charles Schwab, and we buy these notes in your Charles Schwab account. And those accounts have to be maintained by MyTimeEquity. And the minimum to invest in this note is $25,000. So talk to us if you are interested, because this will not last long, because the trade date is 31st July, and after that we may not have access to this. So talk to us if you're interested. Next slide. This note is a principal protected note, which means it is 100% protected on the downside. So there is no possibility of loss of money, in this note. So the way this works is, again, this is issued by Goldman Sachs, one of the big banks, and the underlying index is S&P 500. And the trade date for this is also July 31st. The tenor is 5 years, and the upside participation is 175%. So the way this works is, you invest the money today in this note. At the end of 5 years, you get 1.75 times of S&P 500's return. So let's say S&P 500 is up by 100%, you get 175% at the end of 5th year. Now, the small change here is, in this notice, you don't get 175 of the exact S&P 500's return, but you get the S&P 500's 12 months of performance. They take the best month out, and of the remainder of the 11 months, they see what is the total for 5 years, and they give you 1.75 times of that. So obviously, you are not getting exactly the S&P 500 return multiplied by 1.75, but they are eliminating one best month out of the 12 months. Now, why are they doing this? Now, for them to give you principal protection, which means you are not going to lose money, and to give you 75% more than S&P's actual return, they have to tweak this by removing the best month out of the 12 months. So we can explain you how this works. If we get on a call, we can show you more numbers, and you can then make a decision to invest in this. But for those who are extremely conservative, who don't want to invest money in equity markets because of the volatility, this gives you a chance to invest in a non-volatile principal protected 5-year note, giving you 1.75 times of S&P 500's 12 months, 60 months return minus 5 best months. That is what you get. So talk to us. Very creative structure. We try to bring a lot of creative structures just to get the highest return. That is the only way. Otherwise, there is no magic here in the world of investing. We need to think very creatively, put things together, get it approved by a big bank like Goldman Sachs or Bank of America, Morgan Stanley, BNP, present it to you, hold it in your custodian account, keep it liquid. Any day you want to get out, tell us 2-3 days, we'll sell it off and get the money back to you. So this is about the principal protected note from Goldman Sachs on S&P 500. Next slide. Next slide, please. Jyoti, your slides are not moving. Jyoti, are you there? Anup, can you hear me?
Yeah, Sudhir, we can hear you.
Okay, for some reason slides are moving very slow. Not sure if Jyoti is still on. Jyoti,
Hello?
are you there? Yeah, Jyoti,
Yeah,
your slides are not moving. Seems like some internet problem at your end.
yeah, there was a little fluctuation in the power.
Okay, please move to the next slide.
Yeah, 1 second.
So while Jyoti is bringing it up, guys, we have two more notes which we presented last week, and those notes are still there because the trade date for those notes was July 31st also. So we have close to 6-7 notes for July 31st trade date. So if you are interested in these multiple options that we have, so just message us to wealth@mytimeequity.com, and we can decide which is the right note for you. Jyoti, we are still not able to see the next slide.
1 second.
Okay, so while you try to bring it up, we one of the slide is also on a car wash deal that we have, which we are syndicating. We are buying it through our fund. It's a single asset fund. It's a car wash, which is rented to Caliber Car Wash. Now, given that the big beautiful bill got approved, uh, this car wash gives you almost 100% depreciation, in 2025. Can you go to the car wash slide, Jyoti?
Yes.
Okay, so the total price of the asset is $5.36 million, and the debt on it is $3.2 million, and equity that we need is $2 million. So 250K is the minimum, and you can do this through your 401K as well, but the 401K will not get you the tax benefit because the tax benefit goes to the 401K plan. But if you're doing it through your personal account, you can get almost 2.2 times of your investment as a write-off for 2025. So good tenant, good asset, good location in Georgia state. So you should talk to us if this is of interest to you. Again, we bring a lot of ideas to the table. Not every idea is meant for everyone, but the structured notes, the real estate, the MyTimeEquity digital asset fund, all of these assets put together should be making your portfolio, right? And that's where diversification comes in, and you see your overall portfolio grow. So we have, but can you bring up those slides on structured note, Jyoti, which we didn't get a chance to kind of. Jyoti, are you there? Anup, are you there?
Yeah, I'm here, Sudhir.
Okay, Anup, why don't you take questions? Looks like Jyoti is having.
Yeah, I just thought so. Okay, fine. Yeah, we'll get with the questions.
Yeah.
So I think there seems to be some problem today.
Okay, I can see the questions here.
Yeah.
Okay, so during the downturn of crypto markets, what would be the potential hedge looks like for the crypto fund in preserving capital? What sort of crypto fund your hedge fund invests in? So we look at the technical indicators and move the money to cash. That's one of the hedge that we take, and we do move money between Bitcoin and other altcoins depending on which season we are in. Is it the altcoin season, Bitcoin season, or is it winter and summer for cryptos? So we look at that, and the funds that we invest in do long and short both. So there are multiple strategies, and so this is more like a ETF with multiple strategies, multiple tokens that we have formed. And when we also started it, there were no ETFs or no token accessibility other than opening a Coinbase account and putting money in and keeping it secure and things like that. But today we have few other ETFs, but again, the our fund gives access to multiple managers and multiple tokens and multiple strategies as part of our fund.
So
What is
I'm
the
back. I can take the next question. So next is the expense ratio of the crypto fund. I think that is the next question, and also the taxation work for the investment made on the crypto fund.
Yeah, so the expense ratio of the crypto fund, we have 1.2%, as the annual management fee, and we have a 20% carried interest. Again, it depends on how much you have invested. The carried interest depends on the amount of money that's invested. If you have invested more than $250,000, then the expense ratio is lower versus $50,000 check. And we have a 8% hurdle rate for calculating the carried interest. How is the taxation on how does the taxation work on the crypto fund? So it is a hedge fund. So on the longs, if which we don't exit, the unrealized gains don't get taxed. But at the same time, the ones that come through hedging and churn and all that, you will get to see a mark to market, and it will be reported on the K1, and it will be treated as investment income on your tax return.
Yeah, so there are a couple of related questions with the crypto fund. What is the digital fund upside versus direct investment in Bitcoin and Ethereum?
Yeah, so the diversification is the primary thing. You get access to multiple managers, multiple tokens, and a lot of these tokens, there are about 12,000 tokens in the market out there. So you have to be very careful as to which token you invest in. So we do that analysis, and we strategize the timing and look at the seasonality and look at technical details before we make investments. And last but not the least, multiple fund managers. So we are a 70% fund of fund and 30% direct investment. Now we have been a little skewed on that because we haven't raised a lot of money in the fund. We are just about 750K. But as we start raising more money, we will be investing, a lot more money in the funds. And some of the funds that we have identified are like Multicoin, Galaxy, Parafy, Hyperion Decimus, Vanek, and other funds.
Okay, so there are a couple of related questions. Are those fund managers in-house or with other financial institutes?
Yeah, so we have a combination. Right now, 30%, about 40% of the funds are being managed by myself and Bhavya Joshi, who is the portfolio manager along with me. So we manage that, and we are very active. And we have also have other fund managers, as I said, Multicoin, Galaxy, Parafy, Hyperion Decimus, Vanek, Arc. So we see what's the right fund for us, and we negotiate with them, and we negotiate a much lower minimum for our fund, which otherwise is much higher for direct investments.
Next question is, does crypto present a diversification with equity?
Of course,
Yeah.
it does, because crypto is not the same as equity, but it does follow equity. But sometimes it's the front runner. When Bitcoin starts falling, there is sometimes it's an evidence that S&P 500 will also follow, or technology will follow. And when Ethereum kind of starts pumping, there is a indication that the small cap and mid cap stocks can start pumping as well. So there is a little bit of correlation, but otherwise, it's a very different asset class with a lot more volatility, which is good for trading, and which is good for diversification. But we do have multiple coins of different types, like how you have large, small, mid, and meme coins, meme stocks. We have similar things on on the crypto side. So this certainly is the new asset class, and the adoption is not very high. As we saw in the slides, institutional adoption is slowly happening. So this is the time for those who are not part of it to get in. Now just imagine what would have happened if you had invested in one Bitcoin in 2019 or 2009. The returns are like humongous, like 32,000% or something. So the returns have been very good. Now, a lot of risks of Bitcoin and other coins have been taken away because of regulation. So it may not get you the same kind of returns overall the way it used to be in last 15 years. But still, the technology is new, the adoption of institutions is new, and the adoptions of people all over the world is new. So with all that, I think we are going to see good upside on crypto assets.
Okay. Is it possible to move 401k money into the crypto fund? And of course, there is another question on structure note, which I'll answer a bit later.
Yeah,
So
so
is it possible to move 401k? Yeah.
you can invest money in a crypto fund if your current 401k plan, which is from your employer, allows you to do that. Now, most of the 401k plans don't have a way to invest in a crypto fund or a crypto ETF or a crypto mutual fund. But if it is an old 401k plan from your past employer, then we can roll that into a traditional or a rollover IRA, which acts like a traditional IRA. We can move it to a rollover IRA, and we can make that investment in our funds or in any of the ETFs, or put that money in crypto. It is possible, but may not be with the existing 401k plan.
Thanks, Sudhir. Couple of questions regarding the fees. Does how does MyTimeEquity make money on the digital asset? And there is also a related question is, what is the management fee for crypto fund? I think two questions.
Yeah, I think we addressed this. We have a management fee of 1.5% and carried interest of 20% if the investment is below 250. If the investment is above 250, I think the carried interest drops to 15%, and we have a 8% hurdle rate for calculation of that carry.
Yeah, the next is there was a question: can 401k money be used for the Goldman Sachs note? The answer is yes, definitely. IRA, Roth IRA can be used. And then there was also a question about the 40% barrier. What it means is that I am assuming that this is with respect to the income note. What it means is that as long as the value of the ticker, it doesn't fall less than 40%, you still get your income. So I always give that example of $10. Like, let us say it is $10 on July 31st. On August 31st, as long as all the three stocks are above $6, then you get your income. But the beauty is, as Sudhir mentioned earlier, in case if it is not if it is $5, then after a month or two it comes back above $6, you get the income for all the previous months that you have lost as well. And when it comes to the principal that you get after the after the maturity period, which is, I believe it is 5 years in this case, then you don't need to worry about the 60%, since there is a 1-star feature. As long as one of the stocks is positive, the rest two are badly negative, you still get your money back, right? So I think that is what I wanted to mention about the 40% barrier for that question.
Yeah, and also to add to that, all the structured notes that we bring, usually will have anywhere between 40 to 50% downside protection. Means for income, if it does not dip below 40, 50, you get your income every month or quarter, and your principal is protected as long as the underlying stocks or indexes don't fall below 40, 50%. Now that changes if it's a principal protected note, which is one of the note that we showed. In that case, your principal is not at risk at all. But the returns will be lower if principal is protected. Obviously, higher risk, higher reward. And one other point I also want to mention here is that we can create a custom note. If you like some stocks, or if you like certain index, let's say you like the China index and you want the upside, if you want a 3x return at the end of third year on KWeb or SPY or one of them, we can always create a custom note for you. The minimum investment that we need for custom note is $250,000, but we can create that if you have significant interest, because we do create some of these notes for a few clients, and we also put this in front of others, because it does not matter who invests, as long as we touch that $250,000, the bank is happy with us. And the way we do this is we create the idea, we launch it to multiple banks, we bid it out. Whichever bank comes with the best quote, as long as they are one of the large banks, we sign up with them, get a guaranteed contract, and move on from there.
So one other question is, it looks like the barrier is reducing from 50% to 40% for uh, most of the notes, but that is not entirely true. In this case, it could be 40% barrier, but there are notes that is trading on July 31st, which has got 100% principal protection, as well as one of the notes from S&P derivatives, 34% volatility is having 50% barrier. It's all growth note, and it is giving around 26.5% per annum if called. So, and again, volatility plays a big role in getting these notes at different barriers, and likewise the returns also. The last question, at least that I have got now, is with respect to the Caliber car wash. Is there a deadline for Caliber car wash investment?
So, well, this is an asset we are purchasing for a bunch of people. So the closing of this property is in 2 months. We are looking for commitment right now. So if you talk to us about it, understand about the investment, and if you tell us that, hey, look, we want to invest 250K plus in this, you have to stand guarantee for the loan, because we are only raising equity. So this is more like a property that few people together own. This is not a fund. This is an asset that we are buying together. I am putting my money, and if you are interested in putting yours, we all jointly buy this asset and own this, and at some point, try to exit out of it by either doing a 1031 exchange or buying some other asset.
Thanks, Sudhir. I think that was the last questions. And again, apologies for a little bit of a technical glitch that we had while presenting. But thanks, Sudhir, again for giving an update on crypto performance. What are the upcoming regulatory?
That I see here, Anup, maybe you are not seeing it. So one is the
I think it
UNH,
would have just come now, Sudhir. Yeah.
On the UNH, Intel, and Broadcom.
Yeah,
node.
that was taken back because the client did mention that he's taking back that question because it's already traded. So.
I see. So that is
yeah, sorry.
closed right
Yeah.
now.
Yeah, that is closed, and then client has acknowledged that it doesn't want that question to be answered. But there are two questions that has come up, or one question. Tax deduction is against active or passive income for car wash?
Yeah, so it can be active if you are active. So that's why we would like you to be part of this this asset. It is a joint investment. You stand guarantee for the loan. You participate in the discussions. If you want to go visit the property, you need to visit the property. So for active, you need to put in time, and you need to spend 50% of your time in real estate. Whereas for passive, you can use that against other passive income. So the tax treatment depends on your personal situation, but there are ways to make this an active investment if you have certain involvement of your time out of the overall time that you have to put in. during the year. So we are done with all the questions, folks, and
Yes.
as we discussed, the market seems to be good, doing well, on an upside trajectory. Crypto seems to be doing well. That's where we position our MyTimeEquity digital asset fund for investments. And all the structured notes are gaining a lot of momentum, as well as the education that we are providing to the community is really going far right now. I speak on radio on Thursdays. We are speaking on different mediums in different states. So talk to us if you have interest in us managing your portfolio. We use Charles Schwab as the custodian and Interactive Brokers, two custodians, as well as Fidelity, totally three custodians. And we also have Mainstar, CNB for self-directed IRAs and things like that. And given that, we are closer to end of July, tax planning plays a big role. So talk to us if you want to plan your taxes well in advance. Wealth at mytimeequity.com, and also please join our WhatsApp group to get the latest. Thank you very much, folks, and thanks Anup and Jyoti and Bhavya for joining today's webinar. We'll talk to you next week. Thank you.
Thank you, Sudhir.